20 basic finance vocabulary terms. 1. Assets, items of economic value owned by an individual or corporation, which can be converted into cash. Example, real estate properties and stocks are examples of assets. 2. Liabilities, financial obligations or debts owed by an individual or corporation. Example, loans, mortgages, and credit card balances are common liabilities. 3. Income, money received, especially on a regular basis, for work or through investments. Example, salary. Wages and dividends are sources of income. 4. Expenses, the costs incurred in the process of generating revenue, typically associated with the operation of a business or personal spending. Example, rent, utilities, and groceries are examples of monthly expenses. 5. Budget, a financial plan that outlines expected income and expenses over a specific period, usually monthly or annually. Example, we need to create a budget to better manage our spending and saving. 6. Interest, the cost of borrowing money or the return on invested capital, expressed as a percentage. Example, the bank offers a 3% interest rate on savings accounts. 7. Loan, a sum of money borrowed from a lender, which is expected to be repaid with interest. Example, she took out a loan to buy a car. 8. Stock, ownership shares in a corporation, representing a claim on part of the company's assets and earnings. Example, investors buy stocks to gain ownership in profitable companies. 9. Bond, a debt investment where an investor loans money to a government or corporation for a defined period at a fixed interest rate. Example, the government issued bonds to finance infrastructure projects. 10. Dividend, a distribution of profits to shareholders as a return on their investment in a company. Example, investors were pleased with the company's decision to increase dividends. 11. Portfolio, a collection of investments owned by an individual or institution. Example, he diversified his portfolio by investing in stocks, bonds, and real estate. 12. Risk, the potential for loss or deviation from expected outcomes in an investment or business decision. Example, investing in stocks carries a higher risk compared to investing in government bonds. 13. Return, the gain or loss on an investment over a specified period, expressed as a percentage of the initial investment. Example, she calculated the annual return on her investment to be 8%. 14. Capital, financial assets or resources available for use in the production of goods or services. Example, the company raised capital through an initial public offering IPO. 15. Equity, ownership interest in a corporation or the value of an asset after liabilities are deducted. Example, homeowners can build equity as they pay off their mortgage. 16. Inflation, the rate at which the general level of prices for goods and services rises, reducing the purchasing power of money. Example, inflation erodes the value of savings over time. 17. Diversification, spreading investments across different assets or asset classes to reduce risk. Example, she achieved diversification by investing in stocks, bonds, and real estate. 18. Depreciation, a decrease in the value of an asset over time due to wear and tear, obsolescence, or other factors. Example, the company recorded depreciation expenses for its machinery. 19. Yield, the income return on an investment, typically expressed as a percentage. Example, the bond offers a yield of 5%. 20. Net worth, the total assets minus total liabilities, representing the value of an individual's or company's wealth. Example, her net worth increased after she sold her business.